A year ago, in my first budget, I announced our initial response to coronavirus. What was originally thought to be a temporary disruption to our way of life has fundamentally altered it.
Rishi Sunak has delivered his second budget, but in the days leading up to it, we've had more than a dozen pre-announcements from the Treasury. Everything from a return to the Help to Buy mortgage scheme, to a 6-month extension of furlough, to an increase in the contactless payment limit. That was all revealed in advance. Now, chancellors used to resign when they leaked the budget. Now it seems to be a media management strategy. So was there anything today in the speech that we didn't already know? And what should we make of it as a fiscal and business support package at a time when we're coming out of the biggest crisis in 300 years? Joining me to discuss all that is our political editor, Andrew Woodcock, our business reporter, Ben Chapman, and our business commentator, Jim Moore. So let me go to you first of all, Andrew Woodcock. What was there in there that we didn't already know from Rishi Sunak today?
Mostly what we learnt today was the timings of various measures that the Chancellor was bringing in. We knew he was going to be extending the support for businesses through business rates relief and VAT breaks, and we knew that he would probably extend the uplift for universal credit. We didn't know how long. Some people thought June, some thought July. In the end, it was September and November for universal credit, so more generous than had been expected. Equally with tax, we knew that he was looking at corporation tax. We knew that he was looking at freezing personal tax allowances to drag more people into higher bands of income tax. Now, those Labour have been saying they mustn't be introduced immediately, and in fact, they weren't introduced immediately. They're coming in 2023 for corporation tax, and next year for the income tax changes. And the Chancellor hopes that by that point we'll be over the immediate crisis from the pandemic, and we'll be well into the recovery, so that they'll be easier to bear than they would be if they were brought in this year. I think politically, the most interesting thing about the whole budget was the scale of the sums of money that we're talking about. Rishi Sunak increased the support for businesses and workers to help them through the coronavirus crisis to bring it to a total of £407 billion.
Coronavirus has caused one of the largest, most comprehensive and sustained economic shocks this country has ever faced. And by any objective analysis, this government has delivered one of the largest, most comprehensive and sustained responses this country has ever seen.
Which is a stupendous amount of money. It means that Britain's national debt, which is already at a record high of around £2 trillion, it'll be almost £3 trillion by 2026. And at the same time, the Chancellor is saying that he's going to reduce borrowing at a quite vertiginous scale from some of the highest borrowing we've ever seen down to virtually nothing by that time, 2026. Now, the Institute for Fiscal Studies is saying it's the biggest tax-raising budget since 1993. They're saying that we're looking at tax as a share of national income being higher for a sustained period than it has ever been before, certainly since the Second World War. And those are things which are going to play out massively politically as we go into the period up to the next election, which is coming in 2024. So before all of these tax rises have played out.
Yeah, and I mean, my focus as economics editor is obviously on the Office for Budget Responsibility's official projections. And I was struck by the fact that they weren't very different from what was announced what was forecast in November. The Chancellor said that they were revised up and a swifter recovery, etc. But when you actually look at the detail, there's not that much difference. There's a slightly faster rebound this year, but nothing really to write home about. And actually, the big important judgment was the degree of scarring that there's going to be indefinitely because of this crisis. And that was exactly the same as projected in November, about 3% of GDP. So nothing really that new on that economic projection front either. But let me now turn to you, Ben Chapman. What were the key notes, what were the key points for households to note in there? And what's going to impact people's personal finances the most, do you think?
Well, there were a few things, as Andrew said, obviously a lot of it was trailed before. There was some good general news on jobs with the unemployment forecast coming down from a previous high of 11.9% to now 6.5%, according to the OBR.
Office for Budget Responsibility are now forecasting, in their words, a swifter and more sustained recovery than they expected in November.
Which is obviously good news for jobs. Probably one of the biggest announcements was the extension of the furlough scheme for 6 months, which is a relief for 4.7 million people who are currently being paid through that. There was an extension of the self-employed income support scheme. Again, that was trailed before. Significantly, that will be extended to more than 600,000 people who were newly self-employed who previously couldn't claim. They will now be able to claim a grant of up to 80% of their previous earnings. On the day itself, we had a confirmation that the £20 uplift to universal credit that was introduced last year will continue.
To support low-income households, the universal credit uplift of £20 a week will continue for a further 6 months, well beyond the end of this national lockdown.
Now, that is hugely significant for some of the least well-off households in the country. And it should be good news for the wider economy as well, putting money into the pockets of the people most likely to spend it. There were a couple of sort of crowd pleasers, I suppose you'd call them. The fuel duty was frozen again.
To keep the cost of living low, I'm not prepared to increase the cost of a tank of fuel. So the planned increase in fuel duty is also cancelled.
Arguably not in line with our environmental commitments, but obviously makes it cheaper to fill up your car. There was a freeze in the duty on alcohol as well, which will no doubt be popular. But I think probably the biggest takeaway from personal finance's point of view was the freezing of thresholds for income tax. Now, it might sound relatively innocuous. It's not strictly a tax rise, but it is in effect a tax rise. The OBR said 1.3 million people who previously earned below the threshold will be brought into paying income tax between 2022 and 2026. And a further 1 million people who already pay income tax will now pay more because they'll be dragged into a higher bracket as wages rise. So from a personal finance point of view, that sort of what used to be called a stealth tax, although the Chancellor wanted to make very clear that it wasn't a stealth tax today, was probably the biggest announcement today.
Yeah, I think most people, as you intimated, Ben, would regard it as a tax rise if they are suddenly paying more in income tax than they were previously, no matter what the Chancellor actually says about it. And there's a big question about what impact that's going to have on the economy going forward, whether, tax rises in economic terms do tend to slow recoveries. Will the economy be able to bear these tax rises as they start to hit from 2022-23? That's a big judgment that the Chancellor's made, and we'll see obviously how that works out. But I want to come down to you, Jim Moore, to talk about business, because there was a short-term giveaway to business. This wasn't there, but there's also a longer-term takeaway in the form of higher corporation tax. What do you make of that, and how a business is going to take it, do you think?
The Chancellor's surprises what came in, because if you look at the investment allowance, what he's allowing companies to do is offset 130% of any investment they make in things like plants, machinery, from their corporation tax bill.
Let me give the House an example. Under the existing rules, a construction firm buying £10 million of new equipment could reduce their taxable income in the year they invest by just £2.6 million. With the super deduction, they can now reduce it by £13 million.
And if you look deep in the Office for Budgetary Responsibilities estimates, this is a really very generous tax break. It's going to yield $12 billion a year. So that's a significant tax break. And the Chancellor will be hoping it does produce a return in terms of investment, which has historically been pretty bad in the British economy, and which George Osborne starting the progressive cuts in corporation tax in the hopes that it would stimulate it has failed to do anything. So on the other hand is obviously in a couple of years' time, we see a very big rise in corporation tax. It's currently 19%. It hasn't actually been increased since 1974 when Dennis Healey was the Chancellor. and it's going to go up to 25. This caught me on the hop because I thought that it would go up for 23. The reports that came out about 25 in the papers leading up to the budget looked to me like it was a softening up exercise. What you do with the public, and especially with Tory MPs, to sort of brace them that something nasty is coming, and here's a big, scary looking number. But when it comes out, it's not quite as bad, and everyone feels a little bit better about it. But no, in fact, instead of apart from deferring it for a couple of years, what the Chancellor have done is just say, whack, here's 25%. Now, again, this will raise a lot of money. More than half of the fiscal consolidation he's done in this budget comes from raising business taxes like this. So it's a big number. It only hits profits. So firms which have been weakened and have been losing money and still are losing money in a couple of years' time won't get hit. The risk through doing this is that corporation tax is very avoidable if you have a clever accountant and if you have international operations, which is why Amazon pays tuppence halfpenny in this country. So that's the big danger. What the Sunak has done is given companies a couple of years to call on their accountants to say, how can we structure ourselves to best avoid this tax? And you can bet there'll be a lot of that happening. So it remains to be seen how much this will raise.
And Jim Moore, one other thing that we didn't hear about in the Chancellor's speech was Brexit, of course. I'm wondering what your thoughts are on how that might interfere with hopes that these business allowances, these investment allowances, will spur investment. Is that going to be pushing one way, but Brexit and obviously the impact on the negative impacts of firms of that will be pushing in the other? Do you think?
Well, yeah, I think it will inevitably. Brexit shuts Britain out of the world's biggest single trading zone. The free trade agreement on the back of that, which hasn't really captured the news agenda because COVID has been so dominating anything, is very basic. It's not a replacement for what we had. And if you are a big multinational business looking to invest, where are you going to do it? In the single market or in Britain? You're probably going to do it in the single market because of the customs hitch, because of the bureaucracy, because of the costs Brexit inevitably imposes on business. So I think, the Brexit is what's hanging over these budget. It's Keir Starmer mentioned it very briefly, but didn't really get into it heavily. But it is there, and it can't be avoided. It's just nobody really wants to talk about it at the moment.
In today's budget, we begin the work of building our future economy.